It was another big week in the semiconductor industry, and we've got a lot to talk about. We'll start with Intel, as the company is rumored to potentially be breaking up their business. You've got Taiwan Semiconductor. You've got potentially Broadcom as well poking around the company. We'll discuss how much more upside does Intel have. If you didn't take our buy recommendation several weeks ago, where we gave you 3 reasons why we were buying Intel stock, are you too late, or is there potentially more upside? We'll discuss all of that. We'll also discuss Nvidia, the company getting a lot of anecdotal reports from suppliers like Supermicro on Blackwell demand. We'll go into Supermicro. We'll talk about some of the positives that are coming from Supermicro. We'll also go through the conference call as well. Several key things on the conference call, not only as it relates to Supermicro, but also as it relates to Nvidia, as they are obviously a lead partner for the company. We'll discuss what all of that means. We'll also look at 2 smaller companies. We'll look at CAMT, which reported earnings this week, also what they said on their conference call, and we'll also look at On2. Company also reported earnings and, more interestingly, had a single comment on their conference call, which kind of lines up with the demand expectations that we believe are coming later this year for Nvidia and the rest of the semiconductor industry. We'll also look at this technically as well. What is going on, investors? Hopefully you guys are doing well out there. Welcome to the Semiconductor Show here on Equity Empire. These videos are made for top 1% investors. We're not trying to make investment videos for the 99%. We're not trying to blow up on YouTube. We're not trying to get the most views. We're not trying to get the most AdSense money. I have nothing to sell you here on today's video. I just want to reach the 1% investors. Everybody else can go watch their 18th video on Palantir stock. The rest of you can make some easy money in the semiconductor industry, and that's what those videos and these videos are all about. Let's kick things off with Intel. Shares of the company skyrocketed this week. In fact, it had its best weekly performance in 25 years. If you've been paying attention, savvy investors, the 1%, if you will, have been looking into Intel, and for a number of different reasons. First of all, technically, if you look at the technical chart of Intel, it was an absolute screaming buy down at these levels, $18, $19. That's when we got into this one. So technically, it made a lot of sense. We'll talk about more of that here in a second. Fundamentally, some things lined up with Intel. When they fired CEO Pat Gelsinger and they replaced him with 2 nobodies, you knew at that point potentially Intel could be up for sale. And there's been lots of rumors. We covered it here on the channel. Yet Elon Musk, Global Foundries, and other people meeting in Mar-a-Lago, potentially talking about a buyout here. You've had Qualcomm poking around the x86 business, the Altera business units, and now, just this week, Taiwan Semiconductor potentially wanting to buy the company's foundry or their manufacturing business, and Broadcom, a new incoming bidder for the x86 design assets, both being considered as possible buyouts of Intel. You have a stake in Mobileye as well, the Altera business unit, which has been valued at maybe $15-16 billion on its own. Intel potentially, I think, is going to get pieced out very soon. Now, what does that mean for you as a shareholder? A couple of different things. First of all, there is probably still upside in Intel. You've got a business worth $100 billion, but when you dive into the company's corporate balance sheet, and again, this is the reason why we're doing videos to 1%. Nobody's opening up these balance sheets and looking at this stuff and entertaining anybody, but this is how you make money. When you look at Intel's balance sheet, you look at a company worth $100 billion, but keep in mind they do have long-term debt sitting at about $46 billion. Some of that is rolled over to the short-term side, $3.7 billion. All said and done, this company's got $50 billion worth of debt. Now, obviously, it's balanced off by assets. You've got about $21 billion of what we would call cash. In terms of total current assets, $47 billion. The company says that they have over $100 billion of property, plant, and equipment. Obviously, a company like Taiwan Semiconductor would value that very high. And then when you look at a company like Broadcom, they might value this inventory relatively high, but also the intellectual property, which you can't really necessarily value on Intel's business unit here. They have a lot of intellectual property as it relates to the x86 design. They have a lot of customers. They have a lot of relationships out there that Broadcom would like to tap into. So I actually think you have got enough upside left in this one, where if you didn't get into this one when we recommended it back down at $18, $19, $20 per share, you probably still have some upside. Now, Intel could still fumble the football, right? Okay, they could reject the bids from Taiwan Semi. The window could close where Qualcomm and Broadcom and maybe somebody else wants to bid on the design units. We'll see how Intel handles this. The other thing that you have to factor in is that you might be forced to sell your Intel shares. Let's say there's a buyout bid and Intel shareholders receive, let's just throw a number out there, $45 per share. So that sounds great. It's like, oh, wow, I doubled my money. But you will be forced to pay taxes at a short-term capital gains rate on that, depending on when that transaction closes. So you have to factor that in depending on what tax bracket you are in. And considering we're doing these videos to the 1%, I'm assuming about half of that money would go poof. And so you have to factor that in if you're going to buy Intel shares. Also, some of your equity stake in Intel, if you get a buyout from Broadcom or TSM or somebody else, maybe it's one of these buyouts where instead of receiving cash for your Intel shares, you receive shares in Broadcom, shares in TSM, that type of thing, maybe a combination of both. You have to factor that in with your own tax situation, with your own beliefs in terms of long-term capital gains, all those types of things. I thought several weeks ago this was worth enough for a flyer. So far, it's working out. I think it will continue to do so. Now, speaking of working out, Nvidia has had a great week, up about 4%, and we got a ton of news, not directly from Nvidia, but we got news from its main customers. And these are the server makers out there, which are essentially kind of the middleman in between the data center provider and Nvidia. And so if you're a data center, you call up maybe Supermicro, you call up HP, you call up Dell, they make the servers, they get the product from Nvidia, they configure it to them how you want, and then it gets dropped into a data center. Well, Supermicro is betting big on Blackwell. And we'll talk about Supermicro more in depth here in a second, but Supermicro had a lot of bullish things to say about Blackwell. That leads me to believe that demand is absolutely skyrocketing. And that should come as no surprise to anybody. Now, Dell also picking up some business that probably dropped a little bit as it relates to Supermicro. Companies might not be confident working with them just based on some of the financial stuff that they've gone through. And so Dell picking up a $5 billion AI server deal with SMCI, which is also trying to raise money at a big valuation. Now, let's talk about Supermicro, because as it relates to Supermicro, it relates a lot to Nvidia. Company had a gigantic week, and I would say it's not all clear. Now, I would not invest in Supermicro, but my risk tolerance could be different from yours. Also, my process of investing could be different from yours. I am not going to invest in Supermicro because they have not filed quarterly audited financials. They also have not filed an audited audited 10K annual report. The fact that the company has not done that means that I simply will not invest. It has nothing to do with Supermicro. It has to do with every single company. I urge you to call Warren Buffett up on the phone and say, hey, Warren, would you invest in Supermicro? And he would tell you the exact same thing. Not that I'm trying to copy Warren Buffett's process, but that is what makes a 1% investor, is to have a process and to eliminate a good portion of stocks to actually invest in. Now, some of these stocks actually might go up, and I understand a lot of you guys watching right now, you might have invested in Supermicro. Your process is different. You're comfortable with the type of risk. That's all good. Now, I think you got some really, really, really good news outside of a set of audited financials, which haven't showed up at this company in basically a year. If you can ignore that fact, company did get some great results, okay? Talk about the Q2. It's really about the future with Supermicro, but the big thing is they secured a $700 million convertible senior note. So we don't need to get into what a convertible senior note is and all that type of stuff and the conversion price and the rate and all that stuff, but it was very cheap money in my opinion. And so when you get $700 million dropped on your lap at just a 3.5% interest rate paid semi-annually. That is what I would consider very cheap money. If somebody wants to drop $700 million in my lap at 3.5%, I'll take what I can. I'll take $70, let alone $700 million. So very cheap money. And what it also says to me is the group of investors that are behind this $700 million, they saw enough from Supermicro financially, because nobody dropped $700 million on the lap of Supermicro, which again hasn't produced audited financials in basically a year. Nobody does that without doing their own due diligence. So what this shows me is that outside people did some due diligence. They saw enough from Supermicro to extend them this $700 million. And that is a very, very good thing for Supermicro. Again, until they produce financials, I'm not going to invest in them, but everybody has their own process. But what we also learned from Supermicro, just because I don't invest in Supermicro doesn't mean I don't pay attention to them. That is because Nvidia is like my largest holding. And so as Supermicro goes, so goes Nvidia. They said some very interesting things on the conference call. They kicked it off by the fact that they said that they've got volume shipments of both air-cooled and liquid-cooled Nvidia Blackwell. That is very good. Very interesting sentence here. When you read through these conference calls, there's 10,000 words. Oftentimes it's one sentence that kind of sums things up. And this one thing did sum it up a little bit. And they say some customers, referring to data center providers, also need more time to finish their DLC. DLC is direct liquid cooling. This is a somewhat newer, put that in air quotes, newer technology as it relates to data centers. Data centers in the past were almost 100%. In fact, all of them, all the large ones, were cooled using air, basically air-conditioned units. So obviously, if you have a big data center, you've got a bunch of computers in a big room, and it produces a lot of heat. And as that heat generates, it reduces the performance of the data center. So you've got to keep it cool, okay? And so in the past, the way they've done this is more or less, it's a little more complicated than like the air conditioner in your home, but for simplicity's sake, it's done through air conditioner. Well, what they're doing is they're moving to what's called DLC, or direct liquid cooling. You're putting the cooling right on the rack. It's far more efficient, okay, and it's much better cooling. So all of this is great. It's great for the environment. It's great for performance. It's literally great from everything. It's a total cost of ownership goes down. So every data center in the future, if we start looking out 5-6 years, it's all going to be DLC, outside of maybe a couple of small ones or something like that. So what Supermicro said is customers still need time to build this out. So this is showing you that the demand should show up relatively soon in the future for direct liquid cooling. Company reiterated not only kind of their fiscal year guidance between $23.5 billion up to $25 billion, that was slightly lower than the expectations, and they blamed some of the Blackwell kind of reconfiguration and maybe the slower than anticipated ramp production of that. They also blamed it obviously on their financial situation as well. Not filing their audited statements has, I think, turned some companies away from dealing with them and opened the door for companies like Dell, HP, and others to capture some of that business. But they gave us a big guidance total. This company says, and this is Supermicro saying they believe they have the potential to reach $40 billion in revenue. So they're going to go from $23 billion this year to $40 billion in 2026. That is a big jump. That is also showing a lot of confidence. Obviously, they're going to be buying a lot of Nvidia product to do that. And so this really just kind of spurs on that Nvidia's growth rate probably very, very much just starting to take off. Now, as it relates to Supermicro, they're a manufacturer. So they have something what they call utilization rate. Basically, it means their ability to manufacturing those things. And this was bullish for Supermicro. They say in the US, they're only using about 55% of their capacity, meaning they could add another 45% or so. In Taiwan, their utilization rate is about 60, meaning they can produce maybe about 40% more. And Malaysia, which is their newest factory, that is only running at about 1%. So they've just started to scale that up. And so this makes you comfortable when the company says, hey, we're going to reach $40 billion in 2026. A manufacturing company has to scale up a bunch of manufacturing facilities. Supermicro is kind of telling you, we've already done that. So a lot of this $40 billion, if it comes in, could flow right down to cash flow and profits if we get some audited financials to prove that. Now, they say they're going to fix their 10K very soon. I would assume probably in a couple of weeks. In fact, I think it's due here in a couple of weeks. And so they say cash flow won't be a problem anymore. It goes back to what I describe here. They're anticipating their revenues grow and they won't have to build out any more of these manufacturing facilities. Also, they say they have their capacity and the customer is ready. This was a big statement. They say they believe the $40 billion forecast is actually a relatively conservative estimate. And so that is not only incredibly bullish for Supermicro, I think it's probably even more bullish for a company like Nvidia. So they reiterated here, they say from a customer demand perspective, customer backlog in terms of total orders that they have kind of just sitting on the books, waiting to be fulfilled. They think that that $40 billion estimate is a relatively conservative target. So if you have the stones to invest in Supermicro, I think you don't have full clearance yet, but I think this gave you a lot of confidence outside of the fact that, yes, the revenue that they put up was somewhat disappointing. They got this $700 million private placement and the bullishness in terms of what management was saying on the conference call about the future. Very, very, very good for Supermicro. I think probably even better for Nvidia as well. Now, CAMT reported their earnings this week as well. Over the past 5 days, shares have gone roughly flat. They reported revenue about $117 million. That was 32% growth year over year. Company makes testing equipment primarily for the high bandwidth memory market. That is firing all cylinders. Company is also releasing a new system called the Hawk, and this analyzes something in the semiconductor industry that's called hybrid bonding. We don't have to get into it technically. As a 1% investor, I don't think you really even need to understand hybrid bonding. You just have to understand that that is coming in terms of how semiconductors are manufactured and packaged in the future. But the company gave us kind of a clear indication when the volume production of that is actually not expected till 2027 or 2028. That's what this new Hawk system kind of identifies. And so any systems that are purchased by semiconductor manufacturers or companies in the space, it's probably more from a testing standpoint. So you're not going to get large orders, but the company said that the total available market for that is $200 million. So the fact that CAMT is coming to market with a Hawk system that really isn't needed until probably a year before 2026, 2027, 2028 at the latest. The fact that they're coming to the market now positions them as a leader. So as this hybrid bonding technology and advancements in semiconductors continue to occur, they'll be right there with a product that they believe has a $200 million addressable market. And again, we're not talking about Nvidia here where we've got a $1 trillion market. We're still talking about a $4 billion company. So $200 million is actually a lot. The company financially, everything looks really good. You've had strong revenue growth. The company gave its outlook where the growth rate from a percentage perspective is going to slow a little bit, but we're getting larger and larger numbers as it relates to revenue. Last year was 315 up to 429. Things look good. Everything looks good for CAMT. It's a relatively smaller company, but they're very financially secure. They have very few liabilities balanced off by a lot of cash. So this company has a lot of things that they could do. They could buy back the stock. They could pay a special dividend. They could go out there and do acquisitions. Very well-run smaller company. Slightly larger company is On2. Similar business model. They're valued at closer to about $9 billion. Shares have struggled over the past 5 days. The company reported their earnings. They've got a 20% growth rate on their revenue. They beat expectations. Key sentence on the conference call. Literally, we read through the whole conference call. There was one sentence which kind of supports what we've been saying with Nvidia. We've been saying with Nvidia, with the ramp up of Blackwell, their newest product, it's been kind of slow. It was supported a little bit by Supermicro's conference call where they talked about some of the slowness of the Nvidia Blackwell ramp. They have customers that want it, are ready for it, but Nvidia's allocations have still been relatively tight when it comes to distributing this product, and that all relates to manufacturing. It all goes back to Taiwan Semiconductor as well. They can only make so many of these chips. And so what we've said is that the upcoming quarter, and on next week's show, we'll do a preview of Nvidia's earnings. Next week's show, we'll talk about the expectations for this quarter with Nvidia are probably baked into the stock. I don't think next quarter is going to be astronomically better than what Wall Street expectations are. It's still that back half of the year for Nvidia. We've talked about this. I mean, I can't tell you how many times I've talked about this on the channel, and it's these expectations as you move into Q3, Q4 of this year. Can you come closer to the high-end estimates, which are closer to 60, 70, 80 billion dollars, or are you going to come towards the midpoint, low point, which would put you at about 50 billion dollars? If Nvidia can convince investors, and it doesn't necessarily have to be on this earnings call. In fact, us as 1% investors, we actually kind of hope that Nvidia bricks here and that they guide almost in line for the upcoming quarter, because I think a lot of short-term focused investors will sell the stock off or not bid it up based on that. But if Jensen Huang gets on the conference call and convince people that, yeah, Q2, Q3, Q4, we're going to do closer to 70 billion rather than 50 billion, this stock's going to have a new leg higher. And with On2's conference call, again, they're kind of supplying into this, and they say that the capacity expansion aligns with Nvidia's allocations, which is how much product they're providing to people, though most of the growth is anticipated in mid-2025. So exactly how we're projecting thing is actually mid-2025. So right around late spring, early fall, that is when the orders are going to show up. That is when production is going to be at full pace, and that's when everybody's going to be getting their hands on these things. If Nvidia doesn't do a good job on, and it's really going to be the conference call, if they don't do a good job, then this stock could sell off or go sideways. I think you massively accumulate it. If Jensen Huang does one of his great sales pitches and he convinces everybody, oh, the back half of the year is going to be great, we already have the orders, it's going to be wonderful, this stock's going to skyrocket on that news, and we'll see what happens. On2, very financially same situation as CAMT, doing very nice job in terms of revenue, gross profit. Everything's growing over at this company, financially secure company. Everything looks particularly good. Stock just hasn't performed relatively well. Now, moving over to technical segment. Come on. The SOXX ETF is consolidating in a range that it's really been in for 3 or 4 months now. It cannot get above kind of where it's at right now. 230-ish is kind of the lid on this thing, but it's not going below 209. So this one's in this tight range. You're looking for a breakout opportunity. That obviously could happen next week when you get Nvidia reporting their earnings. The SMH is a slightly different formation. It is closer to the top of the range, but it also is consolidating at that range. As you had the big move up in Broadcom, TSM, and Nvidia, those stocks have kind of flatlined over the past couple of months. This one also flatlining. We're looking for the next move higher in semiconductors. I think it could come as soon as Nvidia's earnings, again, based on what I described, how the conference call goes, how Jensen Huang's sales pitch for the rest of the year, how investors digest that. Again, I think there's this confusion with 1% investors that we're supposed to know everything and we're supposed to be able to have a crystal ball like we're Miss Cleo. No, the way you do this is you run a couple of different scenarios through your mind, you judge the risks, and then you make the best estimation as you possibly can. As you move into earnings, you're not sure at all how the market is going to digest those types of things. All we know is all the proof that I showed you from Supermicro, from Dell, from On2, from all of these companies is showing you that the back half of the year is going to be absolutely fantastic for Nvidia. So in a lot of ways, we want Nvidia to fall on its face over the next month or two so we can continue to buy shares. That is the 1% mindset. The 99% mindset is I want to open up my Robinhood account and see my 3.5 shares of Nvidia going up. The 1% mindset is I want this one to dump back down here to 119. Shoot, it'd be even better if it dumps out the bottom, gets down here to 83, and then I really back the truck up. But this one's looking really, really good. I think as we move into earnings with Nvidia, there's going to be a lack of sellers on this one, and you're going to set up here at 153, and then it's going to break one way or another as you move into earnings. We'll discuss that more on next week's show. Folks, that was the Semiconductor Show for Sunday, February 16th. It is a holiday tomorrow, so trading will resume on Tuesday. Hopefully, you guys enjoyed today's video. We'll be back again next week, obviously with an Nvidia preview on earnings and whatever else happens in the semiconductor business. Hopefully, you guys enjoyed today's video. Links down in the description to the social feeds and the newsletter. Make sure you're hooked up on those. Until then, good luck with your investments.